Good morning, traders. It's Thursday, the 25th of October, and here's your midweek breakdown. So, Aussie dollar, weekly time frame here again, and price is pushing towards that weekly support level. We have pulled back slightly. If I zoom in right here, you can see a few weeks ago we did tap this level. We've come back here and price is pulling back again, so we could be using this level as a nice level of support. This would be the third week that price has failed to break through this level and could potentially be what causes us to head upside. If we step down to the daily time frame, you can see here that we did have this consolidation region which was broken. Price came down, again failed at that 70-50 support level, but then after retesting the broken confluence zone along with the moving average resistance, we have fallen bearish again. Now today's candle, we saw a little move down towards that weekly support level, but we do seem to be pulling back up slightly. We have rejected the exponential moving average currently. However, we'll have to wait and see how we close. Again, we've got 1, 2, 3, 4, 5 rejections of this support level over here, a sixth over here, and again yesterday failed to come quite as low as Tuesday's candle. Now overall we are in a downtrend with the moving averages pointing towards the downside, so naturally we would be looking at downside targets. My initial downside target following a break of this weekly support level would be 0.7010. Following this, we'd head towards our Fibonacci extension targets. However, as I say, it does look as though price is forming a bottom here, and as the moving averages converge and flatten out, we could see price pop back up to around this probably 7170, potentially 7200 level. If I take it down to the 8-hour time frame, you can see that yesterday we did actually form a double bottom formation. We saw price come up from that weekly support level, tap the consolidation zone in confluence with the moving average resistance zone. So this was a lower high to this. Price fell, failed to make a new low, and again today the current 8-hour candle does appear to be retracing from that support level. So you can tell there's a lot of downside sensitivity here. Price just pulling back up now, again on the H4 time frame towards those moving averages. We do have this counter trend line which I expect price to break. When it does break, we'll be looking for a moving average crossover to take price up to the 0.7128 and 0.7150 in the short term. If we saw a break of these lows here and consequently the 70-50 weekly support level, then again we're looking down towards the 0.7010. Actually, while we're on Aussie dollar, I'll take it down one more time frame to the 2-hour so we can just get a better perspective on what's happening. Although we're still remaining below the moving averages here. Should price close anything like this, then again look at these rejections from this level again and again and again. And this is actually a head and shoulders formation. There you have the left shoulder, head, right shoulder, but we do appear to be rejecting the neckline. From head and shoulders patterns, we wouldn't normally take the entry, until we see a break of this neckline, and given how price is responding to this neckline, then it doesn't look good for the downside. On the hourly, we've attempted downside, looking towards these moving averages, looking to break those and head towards this counter trend line, which you can see better here. Moving averages are itching to cross over, so we'll just have to see what happens. Now onto USD JPY, and if you remember, we've had this uptrend. This is on the weekly time frame, and price has moved bearish this week back to test the uptrend in line with my analysis. However, we have pulled back up from this this region. We have to remember that we are in an overall uptrend, and last week did close bullish after testing the uptrend, and this was a higher low, in the uptrend. Now we could potentially be making a 3-pin formation to close bullish, heading back towards the 113.75, or alternatively, if we remain below this moving average, we could be looking to close this week, dare I say it, as a break of this uptrend. Onto the daily time frame. Now you can see that price came and broke these moving averages. They crossed over, and then this week we've seen price approach that that daily resistance zone right here, in line with the simple moving average. Yesterday, sorry, not yesterday. This was Tuesday that we saw price mount towards the uptrend. However, it did retrace all the way back up towards this exponential moving average. Price did close below this, which did tell us that although we had this big retracement, we were still looking towards the downside. And after coming up to retest these highs, price did in fact melt slightly lower. We did pull back from this uptrend once more. However, we remain below the moving averages. Today, price continued lower towards this refined region as well as this daily support level, but seems to be rejecting this. Again, we're still below moving average resistance, and there is potential here to see price slip below this this uptrend. You can see now on the daily time frame we've had the first point, second point, third point, which resulted in a new high being formed. Now we've had the fourth point, fifth point. Well, this can be called a fifth point altogether actually, and as you can tell, this is just getting weaker and weaker, causing less volatile breaks, and we could be seeing downside. There is potential to see price pop up just for that one final test of this region, potentially further consolidation. As you can see, we can draw in a little consolidation range, something like this. Change colour so you can see it a bit better. Prices ranging within or even between this daily resistance and daily support. We may see further consolidation within here before heading lower, but similarly, if price continues to reject this uptrend and this refined region of our upside Fibonacci, then we will be looking to break this 113 level and head towards 113.75. On the 8-hour time frame, we did have this this head and shoulders pattern neckline as the bottom of this range. So yesterday, after approaching the top of the range to form the right shoulder in line with the refined region of our downside Fibonacci, price melted back through the moving averages, which then crossed over, came down to our neckline, and also tried to push a little further towards Fibonacci extension targets. Didn't quite make it, and then we pulled back up, closing as a hammer candle. Following this, price has come back up to retest the moving averages around this 112.35 zone, and I do expect price to continue downside from this point. It is a bit of a risky call given that we are in an overall uptrend. However, I am anticipating a dollar reversal across the board. So similarly to that Aussie dollar that I've just shown you, we could be heading upside from there, seeing dollar weakness, just like here. If we continue to reject these moving averages, head towards the bottom of this consolidation and break this, then we could definitely be heading downside. Obviously, this would line up very nicely with a as a break of the overall uptrend, which could lead us to a new downside leg overall. On the 4-hour time frame, just scaling it in a little bit, giving you a bit of a better perspective, we are struggling to break that moving average. Similar to the 8-hour time frame, this created last night was a new lower low. We could potentially be forming a lower high here before heading towards our Fibonacci extension, which, as you can see, lines up very nicely with this daily support zone. Breakout targets from the head and shoulders pattern, if we take, well, which would also be this range actually, take your pick, we look to duplicate the pattern down here, so we could be looking as low as the 111.10 region and 11100. Now, if we take a look at GBP USD on the weekly time frame, you know that this week we've had a very bearish week. We had so much indecision up here, but price finally looks like it's popped and heading downside in line with our analysis. There's still a couple of days left, so yes, there's potential to retrace and close around this 1.3 major resistance, but currently I am liking the downside scenario. I do think overall we can see 1.2750, whether it's next week, whether it's in a couple of weeks time, who knows, but the moving averages, although they were converging, they do now look like they're turning, exponential moving averages turning away to move downside once more. On the daily time frame, see we had that that uptrend which was broken, retested along with the 1.3 support turned resistance along with the moving averages. Following that, I did say price would come back up and tap this region, which it did. This can be taken as a rejection from that monthly resistance, even though it didn't quite tap the 1.3 level. It came within that zone, and then absolutely melted yesterday. Further downside, a strong bearish candle which took us below this 1.2925 daily support, which is now acting as resistance to price. You can see we formed this new lower low, lower to this. Today price has come back up to tap this daily resistance, just to retest that, and now we look to head lower to first fulfill this daily support 1.2850, 1.2845 to 1.2850 before heading lower, as I say, towards that 1.2750 weekly support. As I said, there is potential to see price revisit this 1.3 monthly resistance. However, this time frame is giving me doubts that we could actually see that this week, given the amount of bearish pressure. We may see a tap of this daily support before turning upside and heading back towards this 1.3 potentially next week. This could be a lower high to this up here before heading lower back down towards our weekly support. Or alternatively, if price continues to reject this daily level, as you can see, when price reached this level at the start of October, we did see a big move from that level. So now we've broken it, we could be seeing something similar again here. As we approach that level from the underside, price rejected it and then fell. This was a good 100 pips or so that price did fall. So again, we could be seeing that weekly support being met relatively soon. And the 8 hour, it's just a lovely downtrend that we're seeing. The typical downtrend that you'd like to see in your analysis: lower low, lower high, lower low, lower high. Now form that lower low, could be forming the lower high just around here. As you can see, price is quite sensitive to this region. Over 4 hours left to go on this time frame. On this current candle, a lot could happen. Take it down to 4 hour time frame. This closes in 10 minutes for the 10 a.m. and currently we are rejecting this exponential moving average. As you can see, if we plot the previous Fibonacci, price came into that refined region, melted lower, just a spike there, melted lower, come past that extension target. Now if we go to the next low that price has just formed, and I'll put a couple more levels in here. See, the 38.2% level lines up with the top of this region, and it places the 1.3 monthly resistance right in that refined zone. So is still potential to reach that. If we close anything like this, I don't think that's enough confirmation to say that we're heading straight downside. We could still see a push slightly higher. However, this does seem to be one pair that currently I'm seeing further downside. So regardless, even if we do see dollar weakness, I do think the pound could still underperform the dollar and continue to edge lower. There is the potential to see some consolidation within this region. As you can see, we've been heading downside for quite some time. We've had brief hesitations in the market, but no real consolidation. I do see the potential to see some choppy price action. Finally, onto USD CAD, and we are back within this range. However, price is acting a bit choppy. Didn't reach the top of this region, of this range as I expected, and we now look to be heading lower. The interest rate decision yesterday caused volatility and caused price to revisit the lows of this region back below the 1.3 major level. However, we're currently still within last week's range as we see further indecision. Now, with the moving averages pointing downside, if this week closes back at this 1.3 level, potentially even lower, then we could definitely be seeing further downside towards this 1.2710, in line with a test of the channel resistance. However, if price remains above here, I'd like to see price retrace above the simple moving average to accept further upside. Otherwise, I am looking at downside here. Daily time frame. So you can see that we formed those new highs, some indecision, and then yesterday, with that fundamental announcement, price just melted through the 1.3 major level. However, we did pull back a massive amount to close back outside of this downtrend, above the exponential moving average and right within that daily support zone, which does also form a neckline of, if you remember, the inverse head and shoulders pattern, where this was the left shoulder, this was the head, this was the right shoulder. We had the break, and then I was anticipating the retest, which we had a retest and a half, and then a rejection to head upside. We haven't currently confirmed this rejection, as today is continuing bearish. We are just stuck at that that retest of the downtrend within the moving average support. We'll have to see how low price can go today. We could come as low as the 1.3 major support level, which could form a new higher low to this one over here, and then still head higher. However, again, with the dollar potentially turning downside, we could be seeing some downside here. We do have a potential fib. We take these lows here. There you go. You can see that this high, obviously we are in an overall downtrend, but if you take this high as a significant high here down to this significant low, then we can actually see that this comes within our refined region. So with this fib on the chart, all of a sudden the perspective of upside quickly turns to a downside perspective, where we're looking at price to break this 1.3 along with the simple moving average and form a new low at this 1.2900 daily support. Following this, we will be looking down towards the 1.275 weekly support, which isn't actually plotted on here at the moment. But again, we'll have to wait to see how price responds around this crucial region. The 8-hour time frame, price has broken below the moving averages, which are looking to cross over towards the downside. The last 8-hour candle did close very bearish back beneath that overall downtrend, so we could definitely be heading lower here today. 4-hour time frame, again following the fundamentals yesterday, we broke through the moving averages. You could say that we could have called this actually. If we look at the technicals, price was ranging in here, but then we broke the moving averages. A little bit of hesitation as price edged lower. Moving averages crossed over here. Price came up, retested them, rejected them. Bullish pressure did take us back above the moving averages. However, they failed to cross over. We had this doji forming a lower high to over here. And then what happened? We had an evening star formation with this massive bearish candle. Following meeting this 1.3 major support level, price did pop back up to retest this daily zone. However, we're rejecting the moving averages as resistance to now come lower. I do think we can see another tap of this level, potentially some consolidation within this region, but we'll have to wait and see on this one. Personally, I'm not touching USD CAD. Too much going on there with obviously the potential for a USD reversal, as well as the price of oil a bit up and down at the moment. We were looking upside on oil, however, as you can see with this bullish momentum even seen on this chart, oil prices have slumped slightly. We are at quite a key region of support for oil, so we may start to see upside again, which would correlate to downside on this chart. So for now, just wait to see what happens. Wait to see what happens around this 1.3 crucial level before entering any more trades on this pair. Alright guys, have a great rest of the week. Trade safe and hope you all have a good weekend.